Welcome to the Max Dividends channel, where we help people build growing passive income, retire early, and live off dividends. In every Academy case, we take one stock and run it through the same checklist so you can see step by step whether it really deserves a spot in a serious dividend portfolio. Today we're examining ABM Industries, ticker ABM, one of the most established facility solutions providers in the United States, whose services quietly support workplaces, airports, schools, and infrastructure across the country. We'll answer, how does this company make money? Is it a good stock to hold long-term? We'll walk through the Max Dividends checklist, test its financial condition with the 5-pillar secret formula, see what role it plays in a dividend portfolio, and finally ask if ABM is attractively priced today. How this company makes money. ABM Industries generates revenue through a diversified facility services model, delivering integrated solutions that support the daily operations of commercial buildings, airports, manufacturing sites, healthcare facilities, and educational institutions through long-term contracts and recurring service agreements. The core earnings drivers are business and industry, janitorial, engineering, and facility maintenance services for office buildings, data centers, industrial locations, and other commercial facilities, with demand tied to the ongoing need to maintain safe and functional environments. Aviation, ground handling, cabin cleaning, and related support services for airlines and airports, with demand linked to daily flight operations, passenger volumes, and airline schedules. Education, custodial, maintenance, and facility solutions for K-12 schools and higher education institutions, typically supported by contract-based relationships and institutional budgets. Technical solutions, electrical infrastructure, energy efficiency upgrades, and mission-critical system support, addressing reliability, safety, and cost optimization through specialized expertise and longer-term projects. In short, ABM operates at the center of essential facility operations in environments where cleanliness, safety, maintenance, and operational continuity are recurring needs. Exactly the kind of structure that can support a long dividend record when paired with disciplined capital allocation. Is this a good stock to buy long-term? Step 1. Dividend history. Our filter is simple, at least 15 years of consistent dividend growth. ABM Industries clears that bar decisively. Over the past 15 years, ABM's annual dividend per share has increased from approximately 55 cents to just over $1.05. ABM has also increased its dividend for 60 consecutive years, a remarkable record that demonstrates the company's ability to maintain shareholder distributions through recessions, labor cost inflation, changes in commercial occupancy, and broader economic cycles. Step 1 passed, ABM Industries demonstrates the characteristics of a dividend eagle, with a multi-decade record of uninterrupted increases that reinforces its position as a long-term income compounder. Step 2. 5-pillar secret formula. First pillar, sales growth, the foundation. Over the past decade, ABM Industries' revenue increased from roughly $5.1 billion to approximately $8.7 billion. That trajectory reflects the company's ability to deepen client relationships, expand service offerings, and grow across essential end markets, rather than relying on a single geography or a short-term surge in demand. Growth has been supported by contract wins across business and industry, aviation, education, and technical solutions, along with selective acquisitions and cross-selling within its national platform. Its exposure to recurring facility services creates demand tied to operational continuity rather than purely cyclical expansion. This growth has occurred despite pandemic disruptions in commercial real estate, fluctuations in air travel volumes, and persistent labor cost inflation, highlighting the adaptability of the underlying model. Sales growth past, ABM Industries' steady long-term revenue expansion strengthens its case as a durable platform for continued dividend growth. Second pillar, profit growth, the fuel. Over the past decade, net income increased from roughly $500 million to approximately $1.0 to $1.1 billion at its recent peak levels, reflecting a business that has scaled operations and improved efficiency despite economic disruptions and cost pressures. This is supported by long-term service contracts that provide revenue visibility, national scale that supports procurement and workforce optimization, and a diversified client base across multiple end markets. While margins in facility services are naturally tighter than in asset-light branded businesses, operational discipline, selective higher-margin technical solutions work, and continuous productivity initiatives have enabled the company to translate revenue growth into stronger profitability. Profit growth past, ABM Industries' expanding earnings base reinforces the sustainability of its dividend and strengthens its long-term capacity to continue increasing shareholder income. Third pillar, net income, true strength. Net income has generally trended upward over the past decade, moving from modest levels in the tens of millions to well above $150 million in more recent years, with periodic fluctuations. That resilience is rooted in the nature of ABM's business, essential facility services that clients require regardless of broader economic sentiment. While shifts in building occupancy, wage inflation, and contract timing can influence individual reporting periods, the need for cleaning, maintenance, engineering, and infrastructure support does not disappear during downturns. Supported by long-term contracts and a diversified presence across business, aviation, education, and technical solutions, this demand profile has translated into durable profitability across varying environments. Net income past. ABM Industries demonstrates a stable earnings foundation with a multi-year pattern of sustained profitability and overall growth. Fourth pillar, dividend payout safety, protecting passive income. ABM Industries' payout ratio offers an important signal for dividend investors. The company has continued raising its dividend while generally maintaining a reasonable relationship between distributions and earnings. Over the past decade, the payout ratio has typically remained at moderate levels, with a few pronounced spikes driven by temporarily depressed earnings rather than a structural change in dividend policy. ABM continues to invest in operational capabilities, workforce management systems, and selective acquisitions, while returning a portion of profits to shareholders through steadily rising dividends. Because earnings in facility services can fluctuate due to contract timing, labor costs, or one-time charges, short-term payout volatility is not unusual. Dividend payout safety, pay attention. The payout ratio moved above our preferred threshold in certain years during the past decade due to temporary earnings compression. However, these instances were not persistent, and coverage has since normalized to more sustainable levels. Fifth pillar, debt burden, avoiding traps. The debt ratio has generally moved within a controlled range over the past decade, trending from the high 0.50s toward the mid to upper 0.60s without signaling abrupt balance sheet deterioration. This represents a moderate level of leverage for a contract-based service provider with recurring revenue and steady cash inflows. Acquisitions, investments in technical capabilities, and working capital requirements can influence debt metrics from year to year. What stands out is that ABM has avoided excessive borrowing relative to its scale and has maintained a consistent financial profile supported by operating cash flow and disciplined capital allocation. Debt burden past. ABM Industries' leverage appears measured and well managed, supporting confidence that its dividend is backed by a stable and responsibly structured balance sheet. ABM Industries' overall financial score comes in at 93, very safe in our framework, reflecting strong financial stability and consistent cash flow generation. Does it fit our plan? MaxRatio combines current dividend yield, dividend growth, and financial strength to classify stocks as growth eagles, balanced eagles, or income eagles. ABM's MaxRatio is 4.17, placing it inside the balanced eagles category. With a dividend yield of 2.43%, ABM offers a solid current income stream, while a 60-year record of increases demonstrates management's exceptional long-term commitment to shareholders. This blend of steady income and dependable growth is supported by recurring service contracts, diversified end markets, and essential facility demand. Is the stock undervalued today? Versus peers, ABM currently screens as fairly valued in the Max Dividends app. Versus its own history, ABM has traded at an average PE of approximately 113.0 over the past decade. although that figure is significantly distorted by one unusually high period when earnings were temporarily compressed. Today, the stock trades near 18.2 times earnings, below its long-term reported average and closer to normalized valuation levels. On yield, ABM's dividend yield of 2.43% sits above its 15-year average of around 2.12%. Investors are currently receiving more income than they typically have. Analyst consensus sees modest short-term upside for ABM, with a consensus 12-month price target of approximately $52.43, implying around 11.05% upside from the current level. The overall consensus rating leans toward buy. Final decision. ABM Industries occupies an important position behind everyday economic activity, providing facility, aviation, engineering, maintenance, and technical services that organizations depend on continuously. It fits naturally within a max dividend style portfolio, a durable service platform built on recurring contracts and essential demand, rather than a speculative growth story. ABM screens as fairly valued relative to peers and trades below its reported long-term valuation average, while its yield of 2.43% sits above its historical norm. Its 6-decade record of consecutive dividend increases further strengthens the case for long-term income compounding. The one item worth flagging is payout safety. The payout ratio has moved above our preferred comfort zone in certain years, so it deserves attention rather than assuming it is fully locked in. Taken together, ABM remains a compelling long-term holding for investors seeking a balance between current income and dependable dividend growth. Subscribe for more analysis. This is not investment advice.